Hi. Hi. Welcome to what is this? Afternoon market action. And I got so many webcasts. Hi, I'm Glenn. Welcome to Afternoon Market Action.
Are you done?
Yeah, I was waiting for you to say something.
I'm Ryan, guys. How are we doing this Wednesday? We've got big earnings coming out, as you can see by the title here. That's kind of what we're focused on. I can already see in the comment section, Tesla. Whew.
It says buy before.
Glenn, you're doing a live
the
stream
report.
on it this afternoon, right?
Say again?
You're doing a live stream on the Tesla earnings,
I am
correct?
doing a live stream on Tesla earnings today at 5:30. Then I found out that Netflix comes out at 6. I don't think I'm going to do 2 live earnings calls. I may, depending on how the Tesla earnings call goes. I might actually just, you guys might get a 2 for today. You might get a 2 for today. I will analyze both stocks before the earnings call for Tesla. But we'll see. You guys might just get a 2 for today. Glenn, this market timing show, are you in the right place? Glenn, this is the market. Yeah, I'm in the right place. I got my jacket today. I didn't bring it on for the live stream, but I got a nice little jacket, blazer, tan blazer. Looks good. Let me tell you something. I look good today. Ooh, got my little bolo, long sleeve shirt and all that kind of stuff.
I said I like the bolo, Glenn. Nice touch today.
Thank you. Thank you very much. So, all right.
Thank you very much.
Thank you very much. Thank you very much. All right, so earnings, big earnings. We have Tesla, we have Netflix, and I think a lot of that is moving the market today. I did a story, if you hadn't watched it, on Tesla last night. I am not bullish on Tesla. As a matter of fact, I made the call that I am prognosticating that they're going to miss earnings and they're going to miss revenues. That's my call. That's my call. And then I'm taking a look at Netflix. I'll tell you more about the analysis that I have on Netflix when we do the live call for Tesla. We're going to be on about 5 o'clock. The Tesla call is not until 5:30, so I'll have enough time to look at both stocks. But I am bearish on Tesla. If you watch last night's video, you'll know why. All right, so, and Joey put the link in there already. Nvidia down.
That's from the video.
That's from the video? Glenn's Tesla video. There you go. All right, gotcha. Nvidia and the seller, we're going to talk about that today. As a matter of fact,
we both have stories.
We both have stories on Nvidia. I'm bearish on Netflix, says Gerald. I am as well. But again, last night's video, if you haven't watched it, tells you all of the reasons why I am bearish on Netflix. All right, I'm sorry, on Tesla. All right, let's get into the software. Let's start off by looking at a market. How come it didn't move? I didn't use that. You told me not to use that.
Yeah.
So I moved and I put it onto. Oh, why don't you tell me these things?
Amir, yeah, it's down quite a bit.
You don't ever tell me this.
Close to 40.
Yeah.
Did a short on it yesterday. There's a lot of reasons to be bearish on Nvidia. Some good insight. Taiwan Semi, they do their earnings tomorrow after the bell. That'll give some insight on the demand.
ASML too.
Chips.
I think ASML is either tonight or tomorrow.
Lamb Research is this evening, if I'm not mistaken.
That's a third one. That's true. So
that'll give some insight, going into the earnings quarter.
All right.
Between those three.
Big down day today. As we look at the market timing graph, this market has given us opportunities to try to make some money, but the market can't get out of its own way. Excuse me. A lot of it has to deal with what the Fed is doing, what the market's doing. And man, a lot of people just not feeling extremely comfortable about what the market's doing. I'm going to draw another line real quick. Freehand line. There's the downtrend. Intermittent slow. Ooh, what does that look like to you, Ryan, on this graph? What's that called?
Looks like an ascending triangle.
Looks like it. Is that a bullish or bearish thing?
Be bullish?
I think an ascending. Well, I was looking at it more in the realm of a wedge.
Or a wedge. Okay,
that's what I was looking at it more in the way of a wedge. But somebody answer in the room: is an ascending triangle bullish or bearish? Here's the flagpole. Something tells me that ascending triangle might be bullish. Falling axe pattern, bearish. Falling axe. I don't know what that is.
Falling axe pattern. I might have to Google that one
too. Mark says our mics are hot. Did you see that? All right. So anyway, can break either way, says Chuck. Thank you. I'm looking at it
Exactly, Chuck.
bearish. There we go. I was thinking more bearish, but I just wanted to make sure. Just wanted to make sure. All right. Okay. So that's where we stand. I want to look at the market intraday. Intraday, 1 minute bars, current day, just to get a better look at that. We gapped down at the open and we haven't recovered. We've gapped down at the open and we have never recovered. And I think a lot of people are bearish on some of the big stocks that are coming out. Banks hit, some didn't. I got some bank stories to take a look at as well. Higher lows are more pronounced than lower highs. Equals bullish. Higher lows, dang it, Mark. Higher lows are more pronounced than lower highs. So you're thinking that this is bullish. All right. I'm in school watching, says KJ. I like that. All right. So Basil Chapman calls that a falling axe pattern. All right. It's a consolidation pattern. All right. I just think that nonetheless, any way you look at it, the market's trending lower. All right. We did get a primary wave up, and then it bounced. It's been bouncing back and forth between a primary wave up, primary wave down. But my biggest thing that I haven't seen happen at all is the DEW hasn't gone up. All right, with all of this. Down day, expect the stocks I want. Accept the stocks I want to buy. There you go. All right. So let's start getting in. You got something you want to add to the market timing scenario before we get into the stories?
I was just going to say that pattern is actually not a falling axe pattern. So I just Googled and see what. So the falling axe pattern, the trend lines would have to be converging, but the bottom trend line would have to be moving down. At least in the falling, at least what Google's telling me. But interesting. I've never heard that pattern before.
Either. All right, please turn the video with high quality. Massimo, you have the ability to do that. Hit the little cog in the video and you can change your resolution. Massimo, you can do that. All right. So now let's get into the stories that are moving the markets. All right. And we're going to start off. Consumer staples find support, signal opportunity. Ryan had done a short or was talking to me about retail. Retail is starting to show some signs of rebounding. What that means to me is that people still have money to spend. If people still have money to spend, the economy is still stronger than what the Fed wants it to be. If that's the case, then the Fed needs to stop pausing interest rates and needs to raise. Or inflation is going to start running again, and then he's probably going to go and say, oh, heck, we got to raise interest rates by 100 basis points. By that time, the economy gets screwed. And I think that people know that he won't do that. But 2 pauses in a row doesn't make sense to me. I know that a lot of you out there say, wait a minute, if he keeps raising, that's going to hurt the economy. Yeah, that's what the whole idea of slowing down the economy, hurting the economy is what the Fed was going to do. He's not slowing it down enough. Is it slowing? Yes, but it's not slowing down enough. Glenn, did you see the mortgage rate hits 8%? And that's another thing. People ain't buying homes. That's, 8% is a lot to have to pay on your mortgage. All right. Gerald says, asking, what are you asking? Just asking. I am used to seeing the RT in the red and the others in the yellow. Right now, when we looked at the market timing graph, we had a lot of yellow overall, but we're getting back and forth within the red. And if you look at the market timing graph as well, the market's still trending lower. Remember, when we look at the VVC, we're looking at over 9,000 stocks in that one indicator. So don't know what happened to big rally in the fourth quarter. I don't know what happened to it either. I know what happened to it. People are nervous because they're spending more money. And another thing, stocks going into earnings season, everybody knows that stocks have guided lower. They may have hit earnings or revenues, but they've been guiding lower. That's not good. All right, that's not good. Akshay says the Israel war. That, I still think that at some point in time that becomes a black swan event because it just happened. And that could help to push the market down. When I asked that question, a lot of people didn't think that it was a BSE, a black swan event. I think that it could be showing its face as a black swan event because of the far-reaching results that could come from this war. All right.
We're already seeing a jump in energy prices.
Absolutely. And if
even some commodities such as gold.
And then I'm not getting down with that, Mark. And not only that, Iran. If an oil producing country gets involved in this, that's going to definitely. And for anybody who keeps saying, well, I'm not. Oil is going to move. There's no ifs, ands, or buts about it. As long as there's a war and you get a oil producing country involved, oil is going to move. Mark says, sorry, not sorry. I know, Mark. All right. Another problem with what's going on, the resilient consumer keeps pressure on the Fed. Month over month, year over year, people are spending money. People are spending money. If true market hurt was happening, people wouldn't be spending, they'd be holding on to their money. They're still spending money. Retail sales rose, now this is on yesterday, rose 0.7% in September from the previous month, more than double Wall Street's estimate of 0.3%. Retail sales have now grown from the month prior for 6 straight months, marking a consistent trend in consumer spending. An average of nearly 270,000 and again, comes from jobs. People are working. People are working. They're working. They got money. The other side of the story is Steve Chappell and I were talking last week. The job numbers could be misleading because a lot of the jobs that are being added to the roles as people working are part-time jobs. More and more people are working 2 part-time jobs in order to stay afloat. So the number was a little misleading, but it still shows that jobs are going to be out there. How can anybody buy a home now? Joey's got the money. Joey's telling me he was looking at 2 or 3 properties. I was like, yo, brother, hook me up. He said, yeah, you got to pay my mortgage percent, like 15%. And I was, 20. There you go. I was like, you better carry yourself. More resiliency. This is from KPMG. Resilience, revisions in earnings, and risks, weathering political dysfunction and war, which is interesting in regards to what's going on in the market. The market is moving down, but the market does still have some opportunities to rise, and I sit back and call that irrational exuberance. But this story does talk about, employment accelerated in September. What was the purpose of the Fed Reserve's hardest mile in this marathon? Sectors that drove employment gains on the heels of ultra-low rates at the start of the recovery handed the baton to sectors that lagged early on. Sectors that benefited from ultra-low rates and push to buy homes and fill them early in the reopening, yielding ground to less interest rate sensitive sectors. All right. And one more story. Strong retail sales, factory output point to a robust U.S. growth in the third quarter. And when I sit back, and I know you guys don't want to hear me say this, but when the Fed chief is paused for 2 sessions, I can't see why. The other side of it is I can see why, because it puts a lot more strain on the economy, and it also puts a lot of strain on banks, which is one of my 5 bubbles. All right, Ryan, you have a short call on Tesla. Please explain the steps. Thank you. You want to talk about that? Did you tell everybody you had a short call on Tesla?
No, not on Tesla.
So, Jazz, what are you talking about?
Tesla.
Where did you get this unfounded
Nvidia,
information?
Maybe I talked about. I was being bearish on.
Huh?
Maybe Nvidia. But yeah, nah. I haven't talked about Tesla.
I don't know where Jazz came up with that then. So
Glenn,
I'm bearish on Tesla.
From these past few articles that you've been talking about, it still sounds like we're in a situation where good news is bad news.
And bad news is
At
right now
what
turning out
point
to be
does
bad
bad news
news.
become bad news?
But right now, bad news is becoming bad news. It's taken a while for bad news to be bad news, but
So we're in a situation where good news is bad news and bad news is
yeah.
bad news.
And I think a lot of that is because the market's been so overbought. I think the market was just looking for the right means to take a breather and go down.
Yeah.
It is what it is. Labor market is too high. You say the labor, what do you mean by that, Amir? Not sure. All right. The jobs are part-time, not real. Amir, I talked about that. I just talked about that. All right. So this was the stories that I brought to the table talking about the economy. Banks. I got two banking stories. Morgan Stanley shares fall 8% as wealth management results disappoint. Morgan Stanley reported third quarter earnings on Wednesday. The bank topped profit expectations and roughly matched the estimates for revenue. But they fell. Why? Because Morgan Stanley ain't making enough money to the people who get their money managed. They don't like it. Earnings per share came in at $1.38 versus $1.28. Revenue at 13.27 versus 13.23. So it looks like they beat earnings and revenue, but profit fell. So they beat earnings, they beat revenue, but they lost in money. To 2.41 or $1.38 a share. Revenue grew 2%, essentially matching. The bank shares fell. Operations help offset revenue misses elsewhere at the firm. The bank bond traders produced $1.95 billion in revenue, roughly $200 million more than the street, while equity traders brought in 2.5, 100 million more than expected. But the bank's all-important wealth management, that's what they do, generated $6.4 billion below the estimate by more than $200 million. Ooh, so the people, unlike you, when you put your money in other people's hands, nobody invests your money like you do. Can I get an amen for that? I need an amen in the room
Amen
for
to that.
Nobody invests your money like you do. No matter what, anybody can tell you what they can do. I need to see some amens in there, because a lot of people have their money with people like Morgan and Schwab and all those kinds of things. But I am a big believer of managing your own money. Nobody manages your money like you do. All right. Amen. Now, can we all get a mug? No. How about that? All right. So let's go. Another bank, Bank of America, listen to this. Bank of America, unrealized losses on securities rose to $131.6 billion. Unrealized losses because they haven't closed them out yet. That's a big bank. What do you think the regional banks are? I told you I got a bank bubble. What do you think the regional banks, what kind of pressure they're under? Think about that. What kind of pressure they're under? If Bank of America's unrealized loss is $131 billion, what do you think the regional banks are? All right. So those are my bank stories. I'm going to go to
Amir and Roger, just looking at your comments, I'm actually doing a video on gold for tomorrow evening. I did a short on it, just came out a little bit ago. So if you want some insight on gold, that'll be tomorrow at 6.
All right. So it was Bank of America. What was the other bank? Dog. Bank of America. Oh, Morgan Stanley. I didn't put MS in here. So those are my two banks that I've got. Look at where Morgan Stanley sits in the list as a bank by VST. Look at where Bank of America sits. At least it's higher in the list. It's got a VST above 1, but Morgan Stanley is in some trouble. Look at that, growing their earnings at 5. Look at, and there it is. The wealth management side of it, they lost on. They're only growing by 5%, whereas Bank of America is growing by 12%. But both banks are down today. And if I had to choose between the two, Bank of America at least is undervalued, whereas Morgan Stanley is overvalued. Bank of America has better fundamentals than Morgan Stanley, and they grow their earnings at a clip of 12%. And Bank of America is at least a whole, where Morgan Stanley is They sell. And they beat on both earnings and in earnings and revenue. But
look at Morgan Stanley. It's down almost 7%
yes,
today.
absolutely. And they beat. And they beat. It just goes to show where the rubber meets the road, where these people are looking, hey, you making me money? No, you suck. That's what it comes down to. Someone says, I like JPM. I'll throw that in there. This is I think JPM beat too. But they're fundamentally even better than Bank of America. Morgan Stanley out of these three is the worst. JP Morgan, undervalued. Bank of America, undervalued. JP Morgan is even more solid than Bank of America, and they grow their earnings at a clip of 19%. So if I'm looking at banks, maybe, Ryan, one of us need to do a video on banks.
Okay.
I'm thinking
that's not a bad idea at all.
I don't think it is either. What happened to STRL this week? Building is under some severe pressure. Building, I have building stocks in here. Building is under some pressure. And I think that's because the market, look at this. All my building stocks.
Oh, wow.
Is STRL in here? It's not. I'm thinking that.
How much do you think that has to do with interest rates slowing down, building
because
projects?
People are not going to want to build or holding off on building projects because of the money that they got to borrow. It's tough. But there you go, Sue. As a matter of fact, let's go look at the list of these stocks. Let's go look at what building is doing. 3 months.
Igloo just mentioned BNKD, that he's tempted to panic buy it.
Don't panic buy it. I think it's a good play. I've been saying it's a good play. Sue, as much as I've loved the building stocks, not the right time. Look at that. Not the right time. Trending down. No trend.
Still in a clear downtrend.
Yeah. So I think Ryan is right. A lot of it's got to do with interest rates. All right. Let's do this. Let's go into the next story. Next set of stories. I'm going to hold off on my next one and go to Ryan's. So Ryan's story is Walmart beefs up its third-party marketplace as it challenges bigger online rival Amazon. I gave you my opinion. I'm going to say my opinion out loud, but I'm going to, this is your story. Talk about it. Can you give?
No, please share your opinion, Glenn. I want to hear it.
He's going to give you.
Bad idea or good idea?
He's going to give you control so you can move around. I don't know. What are you doing?
That's fine. You could have control. I don't take control. But ultimately, Amazon is now, they've become Walmart's biggest competitor. They've stolen the show when it comes to e-commerce. We've seen, especially since COVID, the consumer behavior is now greatly shifted towards e-commerce. And, I used to say that Walmart, I used to go there for the deals, but now I'm going to Amazon for the deals. I mean, you can get a lot of things cheaper on Amazon than you can with Walmart. And Walmart's trying to step into the space now. And they're trying to do it with this, like Amazon. They have Amazon sellers. Same concept. Third-party sellers for their platform. Walmart sellers. So I think it's a good move as long as they don't take away from their key business fundamentals, being the brick and mortar. I think it will add growth and more revenue to the company. So that way, I think it's a good move. At some point, they have to tackle the giant in the room being Amazon, and I think they're ready to do that. And they definitely have the resources and, the infrastructure to do so.
I think that's all BS. Now,
BS.
So this is what I think. I think that, of course, they're trying to go after Amazon. Just like Ryan brought up a story about Walmart trying to get into the pet stuff. Listen, Walmart's the biggest brick and mortar store out there. Stick with that. Now, you want to put your hand and try to go after Amazon? Amazon's been doing this all its life. This is, for the most part, right? It may be another revenue stream, but I just don't think that they could do it as good as Amazon. But I'm with Ryan from the standpoint of I buy the majority of my stuff from Amazon, and my wife keeps Amazon in business. I think she single-handedly keeps Amazon in business. Every day, if it ain't Amazon truck, it's a UPS truck or it's a FedEx truck. All the stuff coming from Amazon. I just don't think that Walmart, I think the money that they're going to put into this is not going to equate out to anywhere near Amazon. That's my opinion. I do like the idea of having an additional revenue stream, but they're just not going to be able. They're not going to be another Amazon.
No,
go ahead.
I was just gonna say there's a difference between having the idea and being able to execute it properly. Will Walmart be able to execute this strategy properly or effectively? Time will tell.
Okay.
I'm optimistic that they will. They have the resources. Walmart's been around for a very long time. They have, they definitely have the real estate and the infrastructure for these, what would you call those? The little, the Amazon shipping centers. They already have a lot of this infrastructure in place. If they can adopt more of the technological side, like Amazon utilizing robots, drones, things of that nature to enhance the shipping experience. At some point, Walmart has to step into the 21st century. And I think this is, the beginning of them to do so. Right. So we'll see how it works out.
I can't argue that. Knife Man says some people will not pay a subscription for Amazon or Costco, and that's fine. If you don't, you don't. I think more people.
They usually use a friend.
I think more people will.
Family members.
I think more people will than won't. I think more people will than won't, but we'll see. All right, now I'm going to go back to a story. Tesla. Oh, let's go look at Walmart and Ryan's picks. Let's go see what you got here. Walmart. Ryan doesn't have nearly as many picks as I do. I had a lot of picks today. Gosh dang it. But there's Walmart if you want to talk about it on.
Yeah. So, it is overvalued right now, trading just over $160. We value it at $90. It is up today. I do like that. On a down day, this stock is moving up. So that's good. A lot of people could be seeing this as a safe haven, maybe adding a little bit of Walmart for defensive, dividend strategy or covered call strategy, something along those lines. But if we take a look here, in addition to Walmart, it's RV below 1, so that long-term price appreciation, not favorable. But look at its safety rating. In this list here is actually number 2. If we compare it to Amazon, I do like how you just added that. RV, RS. Well, actually, look at the RT on both of these are down. Both companies are trending down right now. VST, Amazon looks to be the clear winner here between the two, just looking at the VectorVest 7 system. And, personally, I would definitely, bet on Amazon, but I wouldn't count Walmart out quite yet. If you look at the growth rate here with Amazon at 20, Walmart is only at 4. So, based upon this news, just throwing it out there, but this, could be a huge opportunity for Walmart to capitalize on. We'll see if the execution is done right.
Oh, Knife Man is getting himself in trouble. Knife Man, you better stop saying every woman. Janice gonna jump up. I'm not even getting into that. No, man. I'm not getting into that. All right. I sort of like the Amazon play, but then I sort of want Amazon to do. I'm sorry, the Walmart play. I just want Walmart to do what it does and do it to the best of their ability. That's my only negative side of it. They are the biggest brick and mortar by far. They are the biggest brick and mortar by far. Glenn.
But how do you grow that concept? They're already everywhere. So geographically, they can't really expand that much more. So other than relying on customers to just buy more goods, they have to offer more services to increase their revenue.
All right. I got you. I got you there too. I got you. Glenn, she is keeping you in style. So listen, I ain't gonna lie. Some of the stuff that comes in is for her husband. The majority of the stuff that she gets is for herself. And I'm all for it. Like, by all means. I love that I have a wife that is willing to do that for her. Go ahead, baby, go ahead. And I never question that. I don't care how much money it looks like she spent. I never question it. I never question it. Jake says Glenn has no style. Man.
Has no style. What are you talking about? He's got a bolo on. Did that come from Amazon?
That's exactly his point.
That didn't come from that. You want to know something? This came from the Cowboy store in Mooresville. What's the name of it?
The one with the
with the
giant
horse
cow
on
on it?
Lebo's? I think,
Is that the one with the cow
yeah,
or the bull
with the
on it?
horse on the top. Yeah, Lebo's.
The horse? Yeah.
All right. All right.
Okay.
So do I like Amazon? I think Amazon is, I'm with Ryan. I think Amazon is the better play compared to Walmart. So we'll go there. Tesla earnings to reveal profit impact wrought by price cuts. Big part of my analysis to be bearish on Tesla is the bottom line. With the war that they're going through, the pricing war in China, it's going to affect the bottom line. I still like Tesla long term. I think it's a great company. It's an innovator. Everybody's, when you go to look at the EV space, it's the big boy in the EV space. But the pricing war to sell more cars, I don't think that they sold nearly as many cars as they thought that they would by initiating the pricing war. All right? And they're going to fall short of what Wall Street thought that they should have sold. And the only way I think that they beat earnings is because it was revised lower. That gives them a better opportunity to beat earnings. But if they miss earnings that has been revised lower, man, they're in trouble. They're in trouble. If you can't even beat the earnings that was revised lower coming into this quarter, you're in trouble. And I think that they still will miss it. I think they definitely miss on revenue because of the affecting the bottom line with the pricing war. So I have Tesla in my list. I'm bearish on Tesla. Even going into the sales call or the earnings call, look at this, down almost 4% today. And I think that people are seeing the writing on the wall prior to earnings. Fundamentally, I still think it's sound. If you watched the video last night, I introduced you to a different part of what VectorVest can do by looking at historical data and watching the historical data over the last year and what it's been doing. And it's still giving me a clear, concise picture of why I should be bearish on the stock. Jazz says, I start to question it when there are so many throw pillows, like I think someone has a... What are you talking about, Jazz? Bye. All right. I know, Roger. Somebody said that I got no, what does it say? I had no style? That was cold, Roger. Glenn, you're looking fresh, King. Thank you, Igloo. That's what I'm talking about. I think TSLQ might be the smart play going into earnings. All right, since I'm bearish on it, let's go take a look at it. TSLQ, I'm bearish. I'm sure that if Tesla's going down, it's going up, and it is. There it is. It's going up. It's got an RT above 1. Tesla's got an RT below 1. I think TSLQ might be even if you hold it short term, because I think that the stock may have the ability to rebound, but I think going into earnings, I think that is the smart play. We'll see. All right, Tesla reports at closing bell today. Actually, the Tesla reports at 5:30 Eastern, 4:30 Central. So it won't be until 5:30. All right, it won't be until 5:30. We'll be on live stream starting at 5. All right. So I am bearish on Tesla. Let's go to the next story. This one was yours, right? Foxconn nope, this is mine. We both had an Nvidia story. Foxconn and Nvidia team up to build AI factories. Now, I know Nvidia got in smoke. Ryan did an excellent video that got a lot of views. That was one of them that got a lot of views, right? It was the Nvidia one.
Yeah, the Nvidia.
Killed it. And it's bearish. I got a little bit of a bullish side. I'm not saying I'm bullish on it, but this is a possible going forward story. AI factories. Taiwan's Foxconn, the world's largest contract electronics maker, will build a new kind of data center using Nvidia chips and software for a range of applications, including self-driving cars. Ooh, that's Tesla. The company said Wednesday. So I think long-term, this could help Nvidia getting on board with this early in the onset of this venture. But you got to wait and see how this all works out. would build these AI factories together, a new type of manufacturing has emerged. And think about this. AI factories, what does that help? That should help the building a little bit, right? And the data centers that produce it are AI factories, adding that Foxconn had the expertise and the scale to build them globally. I think that that's big news for Nvidia going forward. Now, the other side of it is Ryan's story. Nvidia stock falls after the U.S. announces new restriction on AI chip exports. Talk about it.
Yeah, so like Glenn said, I did a short on this a couple days ago, and I've seen the comment section from a few individuals watching. Nvidia's taken huge hits the past 2 days. I think it was down like 40 points. Essentially, a lot of that's coming. The U.S. Department of Commerce came out and said they're adding more restrictions to what U.S. chip makers can export to China. Now, from this article and some of the other articles I've seen, most of these restrictions are on advanced AI chips. As you know, Nvidia being the leader in that space, AMD a close second, and Intel behind them. These companies are going to be greatly affected by this. There's been a trade conflict between China and the United States for quite a while now on these semiconductors because of the military applications and the importance, for military strategic sides. But like Glenn's story said, Nvidia doing another partnership with another Taiwanese company. So the biggest risk for me, semiconductors, great companies, Nvidia, great company, a lot of upside potential there. But the biggest risk is going to be geopolitical, between China and the United States and the tension of Taiwan itself. Taiwan being a very small island, but a very important resource for the United States since they produce most of our semiconductor chips, especially the advanced ones. So I'm short right now on Nvidia just because of the geopolitical concerns. Not that the company's bad at all. I see huge, great side up, potential with the company. But at this time, the risk outweighs the benefits for me,
I posted Mark's statement, just bought some weekly calls on TSLQ to hedge my TSLL. I'm not in Tesla right now, but I think I might be picking up a position in TSLQ. Thinking about picking up a position in TSLQ. I honestly feel that they're going to miss. All right. And even if they do hit, just like what happened with Morgan Stanley, they beat on earnings and inflation and revenue. I'm wondering if the same thing will happen to Tesla. Its stock is just trending down. It's just trending down. So we both have Nvidia. Let's go to Ryan's list though. We both have Nvidia. I'm with Ryan. I think long term, I think it's got great upside potential, but I think that right now, short term, I'm with Ryan. I am bearish on Nvidia just right now. There it is, Ryan. You want to analyze it?
Yep, add Nvidia to the list. Yeah. All right, so we all know Nvidia is a great company. Right now, it is overvalued at 422 compared to our valuation at 358. Big down day today. Look, like I said, almost $17, just shy of 4%. But look at its RV and RS. Fundamentally, this is a very sound company, very safe company, at least as far as its earnings, things of that nature. But right now, you can see the RT right now, it's just trending down. A lot of geopolitical concerns. And what we haven't seen yet, which I would not be surprised in the near future, is if China comes back around and puts restrictions on some of their rare earth metal exports.
I'm waiting for that. I am definitely waiting for that.
Well, they did do that a little bit. I think it was like a year or so ago, kind of when we first started this whole back and forth with China. But doing some research, between Myanmar and China, they have a monopoly on rare earth materials, and those materials are needed by the manufacturers in Taiwan, South Korea, Japan, here in the United States to make these chips. So we do have a lot of the cards in our play, but we don't have all the cards. China can throw us a curveball. If they do halt some of those exports of certain raw materials that are needed for these chips, it's only going to hurt business. It's only going to push prices higher, cause shortages. hurt sales. So, like I said, they're great companies, but I'm just waiting because all it takes is some bad geopolitical news to come out, and the stock can take a huge hit, just like Nvidia, has done for the past 2 days. It's down almost 8% in the last 2 days.
Right.
So I'm kind of holding off on it, but fundamentally, it's a great company. If you're a bottom fisher and you're waiting for Nvidia, if you missed out on the last run, opportunities will probably present themselves in the near future, if I had to guess.
All right. Let's get to the next story. Again, I'm going to do some preliminary analysis on Netflix. Investors focus on price hikes and ad tier updates. Set the report today. The crash, I don't know what the crackdown on the password sharing is doing. I don't know. The potential for more price hikes. If people are feeling the effects of inflation or interest rates, you think that people will stop dropping their Netflix and they're going to lose subscribers. All right. They got Wall Street downgrades. Disappointed investors in the second quarter after revenue fell short of estimates and the company's third quarter forecast came in lighter than expected. I'm not a big fan of Netflix either right now when it comes down to the earnings. The revenue lag reflects the fact that the company's advertising has yet to fully materialize. So they're putting the money behind the advertising tier, and it ain't working so good so far, threatening its global goal of double-digit revenue growth. So we'll see what happens. I'm thinking that, well, I'll tell you more tonight on the live stream about there's a little bit of a weird thing going on with Netflix. I'll talk more.
Well, I think their competition it's increased over the past several years. When they first got into the space, I mean, they were ahead of the curve. Right. But now the space is saturated.
Yes.
All those channels we used to have on our cable, they all have their own app
now.
You've got Disney Plus, you've got
Paramount,
AMC, Paramount, Peacock. When Netflix first came out, or at least in the beginning, a lot of these companies didn't have their act together, and Netflix was able to dominate the streaming space. But now they have a lot of competition coming out directly attacking Netflix and trying to steal their subscriber base.
What the hard
subscriber
base. What the hard part about it is hiring the people to make the content. That's the hard part about it.
So that's one thing I like about Netflix is their originals. Well, me personally, I really like them. Do you have Netflix, Glenn? Do you like their originals?
I like everything about Netflix.
They put a lot of money into their originals.
And there's a lot of content.
And I think it's paying off.
There's a lot of Netflix content. A lot. They got a huge library of content. So but tonight, there is a little bit of a weird thing going on with it that I will talk about. Let's go look at Netflix on my list. I'll tell you, I'll give you more insight on Netflix tonight. Also overvalued, fundamentally okay in a downtrend sell, growing their earnings at 10%. So again, I'm not going to do a deep analysis. On the live stream tonight, you're going to get a twofer. Prior to the Tesla call, we will look at both Netflix and Tesla. Personally, I think Amazon makes better original content than Netflix. I have Amazon too. What is that? That's Prime?
They're pretty neck and neck in my opinion, depending on what you like to watch.
Yeah,
but I would say Prime and Netflix, they're leading the pack.
And Paramount and stuff like that and Peacock are on their coattails.
Yeah. Paramount and Peacock. Paramount, the app, at least my app always freezes. It's giving me bad juju. I ended up canceling it. Peacock, I do like.
Okay.
But as far as like the interface of the app itself, I still prefer either Amazon Prime or Netflix. Just it's smoother. It's easier to scroll through content, easier to find content that you're interested in. So I still think those two lead the pack as far as streaming content.
There you go. All right. A couple of more stories. Oh, gold. Ryan is bullish on gold. I actually own a little bit of gold in my portfolio.
Lou, your comment, Nvidia uses Taiwan-based foundry to manufacture all of its advanced AI semiconductors, so the exports or imports. You're talking about TSM, Taiwan Semiconductor, their manufacturer. Their earnings comes out tomorrow. So if you're interested in Nvidia, definitely watch their earnings call, because looking at TSM's growth and forecast will give you some insight on chips in general. But yeah, going back to gold here. Gold is seen as a safe haven asset. It doesn't take a genius to figure that out. It has been for thousands of years. And gold's been on the move. I know a lot of the viewers last week were talking about gold as a hedge. I was looking at the chart, but I got some good confirmation this week. It looks like gold may set up for a good play here. So I'm going to do a video on that tomorrow evening. Give you some ETFs, give you a spot gold ETF, a couple good companies utilizing the VectorVest 7 software. So definitely check that out. But, like we all know, with geopolitical events going on, between Ukraine, Middle East, tensions between US and China, a lot of fear in the market. Gold has historically always been a good place to go. It's been a laggard. We haven't seen much in gold as of late. A lot of people, kind of lost interest in using it as a hedge. But over the, recent time period, maybe the last week or two, there's been a lot of buying pressure in it. So definitely check out the video. I'm going to be putting that together tonight and tomorrow morning. And that'll be out tomorrow at 6 p.m. We're just going to go over some chart patterns, use the Midas Touch layout, look at some other layouts, and actually analyze and see if gold is sustainable and if it's a good hedge. If it's not, I'll let you know that in the video.
All right. So I put GLD in his list.
Yes.
And let's go talking. I'm gonna start off on a oil path. Shell stock hits record high as Israel-Hamas war tensions fuel oil price rally. And then Ryan's story. Iran call for oil embargo on Israel as Middle East tensions flare up. I'll let Ryan's story go. Shell in and of itself is just telling you that it's moving. This war right here seems like it's going to move oil more and faster and higher than the Ukraine war.
I would imagine so, just because of where it's geographically placed. As I don't want to get into politics, but Iran does play a role, or at least allegedly plays a role in some of this. What's going on. So you see here with the article, Iran calls for an oil embargo against Israel as the tensions flare up. And as I was researching this article here, one thing I found very interesting, that the U.S. actually is cracking down on the Russian oil sanctions. I guess some companies were able to get oil, in the worldwide, pipeline, illegally, but they're cracking down on that. So, if you have conflict or oil embargoes with major oil producing nations, I mean, that's a recipe for gold prices to go up, or sorry, oil prices to go up.
All right. So I've got Shell. Did I put a oil stock in yours? Yep.
I put a HNRG.
There you go. Down today. All right.
So I like it. It is undervalued. We've had $22. RV, it's got great long-term price appreciation. A little bit on the riskier side, with the RS below 1. Nothing too crazy at 0.92. But look at that momentum to the upside right now, 1.84. This stock is moving. It's the only buy-rated stock in the list. And if you look at its growth rate and earnings at 47, it is the number one in the list as well. Let's pull up the chart. See what we got here.
Wow.
I mean, look at it. Nice lower left to upper right. It is a down day today, but, I like it.
Wow.
You just
you just did a coal video,
I don't see it stopping.
Didn't you just do a coal video? Another coal video?
Coal, yes.
So we try to tell you guys that we stay on top of all of these topics on our channel. If you don't watch those, you're doing yourself a disservice. We try to go out of our way every day to provide some video content about something that's pertinent in the market. All right?
Yeah. A war in the Middle East raises a lot of, it puts pressure on energy across the board. If you look at uranium, that's actually tonight's video. It's on the move once again. Coal has been on the move, down day to day. Petroleum on the move. So energy across the board is being affected by these geopolitical tensions. So, there's the URA there. So it is down a little bit today. But if you look at that RT relative timing, the short-term price trend is in our favor right now.
All right. Dang, we only got 10 minutes left. Do you want to see our picks from last week? Yes or no? Or do you want to go straight to their picks? It's up to you. You call it.
Let's go straight to their
All right.
picks. Let's help them out.
Oops, wrong one. Customer picks last week.
All right. So go ahead and start typing in the
Not
symbols.
yet, not
I'll
yet,
read them
not
off
yet,
the
not
Glenn.
yet, not yet, not yet.
Or not yet.
Not yet. Let me move.
Well, they usually take a minute to come in anyway.
Okay, good. Let me move these. Gosh, 19 stocks last week. I'm not doing that again this week. Doing 10 stocks.
Let's 10 stocks it is.
Put it onto their picks for last week. Picks this week. Empty the.
All right, go ahead and start typing in the symbols when you get a chance.
All right,
I'm
ready.
Cool. All right, we've got AI, KO, RGR,
3,
MRVL, FICO,
MRVL. Okay. 4,
ZS,
FICO.
Yeah, Marvel.
5,
ZS,
Zscaler.
DRV,
6,
RNR,
7,
LPG,
8,
CLS,
and that's it. 9,
SYM.
Fine. All right, that's 11. Psy!
Okay.
SYS or
no.
SYM? SYM.
SYM.
I wish you speak English because sometimes I can't understand what you're saying.
Speak English.
SYM.
It's my accent.
It is your accent. All right. So we got 11. All right, let's go see what their picks look like from last week first. 19 picks. What knucklehead gave him 19 picks last week?
That would have been me.
Was it you?
But, 19 stocks, that's good diversification.
Whatever.
It's hard to manage.
Let's see what they did last week. They were down about 5%. Out of them.
Oh, you guys got to tighten up.
14 losers, 5 winners. Look at the one.
What was the biggest loser?
The biggest loser was 30 TPSC. Oh, that was the drug stock. That was the drug stock that went up like a billion trillion %. That was all profit taking. Modine, which I like, got hit. Target, the glass company for building, which I like, got hit. Plug, hydrogen got hit. STRL got hit.
Yep.
Zim got hit, even knowing that the earnings was coming in. EMPH, man, a lot of stocks got hit. DFEM, wow, actually got hit. All right, so those were their stock picks from last week.
DFEM, what is that? ETF?
That's the ETF for the defense stocks.
That's what I thought. Okay.
All right, that is a nice quick test showing not to be against the market direction. Ooh,
exactly.
You ain't about lying a lick. You ain't about
John,
lying a lick right there, bro. For real.
Sometimes a lot of people forget cash is a position. If you don't know where to be in the market, sometimes you just got to refocus, revamp, go to cash, and then, when the time comes, then start deploying resources.
You know what else?
But you don't always have to be in the market.
You know what else I like about what John just said? Because everybody, when they come on here, say, hey, what stock should we buy? No. If the market's freaking going down, do you think that we're always trying to bring you if there's no bullish stocks to bring that we feel comfortable in, why would we try? And John was right on point. These are the stocks that you gave us last week.
Mm-hmm.
And it's tough. It's tough. I'm going to say that before we go look at their stocks, and Ryan, I'm going to call it. When I look at my stocks for this week, bearish, because I still think banks are in trouble. Bearish, bullish on Shell and USO. Bearish, bullish on TSLQ. I'm actually bullish on the consumer staples and bearish. All right, so I'm only bullish on 1, 2, 3. Is that right? Only 3?
Yeah, looks like it.
1, 2, 3, 4. Shell,
Oh, Shell, yeah.
USO, the Tesla Bear, and Consumer Staples. All right. So I'm just, and Ryan, let's go.
But
Let's
look,
go talk
most of your bullish focus is on energy. That's the place to be.
USO, Shell. This is just because of the earnings, and I'm bearish on it. And Consumer Staples is an interesting thing, but I'm going to play the ride for that to the upside. Ryan, I'm going to make you call it. What are you bullish and bearish on? Bullish?
Bullish, Nvidia bearish, gold bullish, uranium bullish. Amazon, honestly, at this point, I'm bearish just because of the market. Great company. Walmart, I wouldn't buy it right now. I do like the news around it, but the market's not there for retail. I do like the numbers. I'll go bearish till next week.
All right. Janice says, Ryan, the crowd pleaser. Where the hell did
The
that come
crowd
from?
pleaser.
What the crowd pleaser? What crowd pleaser? All right, Janice, it's a good thing I like you. All right. Anyway, let's go look at the customer picks this week. We'll go every other one. You'll start. Go ahead.
All right, we got Renaissance here, R&R, priced at 224. We value it at 309. Updated day, so it's undervalued. Up today, RVRS, great fundamentals. The trend, RT relative timing, also in our favor. And look at the buy recommendation, positive growth rate at 30%. Let me just scroll this over. Where we at?
Insurance is a good place to be.
Interesting.
Insurance
Okay.
is a good place.
I didn't know what that was, that company. So insurance, I like it.
Insurance is a good place to be. All right. I think that this is oil. Transportation ship. Undervalued, fundamentally sound. Not as fundamentally sound as Renaissance, though. In an uptrend, 27%. I like the pick. All right. But understand, just like John says, even though these are good picks so far that you've given to us, keep in mind the market's direction. Go ahead.
Definitely put some stops in place.
Say again?
I was saying definitely make sure you have stops or an exit strategy in place. All right, so we got CLS here, Celestica. Down day to day, we're trading around 26.32. It is undervalued right now at 33.83, so that's a plus. RVRS, fundamentally sound. I like that. And an uptrend with its RT, buy rating, and positive growth rate. So great company. May not be the best time. In general, a little bit riskier, but the company itself looks good. And it's electronic. Interesting.
They got some good diversification on this list today.
Yeah, just looking at it. Yeah. No energy in that list, it looks like.
Real estate, mortgage rates, the bearish side of real estate's rocking and rolling. Look at that RT. The stocks are at the top of the list. Most likely will have RTs above 1. They're in an uptrend. But it's a contra ETF against real estate. I like the play. Next one.
Here we've got FICO.
Amir. Hold on a second. Amir, stop spamming. Stop spamming.
Meta.
Stop spamming. Go ahead.
So let's see here. We got FICO trading at $912, so greatly overvalued. We value around $534. Down day to day. RVRS positives. The company's got good fundamentals. The trend, it is favorable. The magnitude's not that great, but we do have a buy rating. And the GRT is at 21, so it looks like a good company right here.
Someone says, how do you feel about defense stocks? We've got a video up there 2 weeks ago or 1 week ago, Joey?
It was last week.
When was the defense stocks video put up? Like, was it last week? Yep. It was last week. Go check it out. All right, go check it out. We're going to look at... What? Oh. Well, it's because you weren't paying attention. You were falling asleep.
I'm listening.
Stop yelling at me.
You stop yelling at me.
You stop yelling at me.
I'll pull his car around.
You pull the car over all you want. I'll put you in timeout. All right. We're gonna look at graphs in a second. Zscaler. Way overvalued. Woo-wee. Way overvalued. RV just at 1. RT above 1. 42. I got an issue with it being way, way overvalued. We're going to take a look at these graphs real quick in a second. You do Coca-Cola.
Coca-Cola, overvalued right now, 54. Valuation comes in at 46. It is up today. It's a down day in the market. Again, Coca-Cola seen kind of a safety net play, right? It does pay a dividend, typically seen as a safer stock. It's the RVRS, which actually I'm surprised. Look at the RS. It is below 1 right now. And it's trending down at 0.86. And it has a hold recommendation. So unless I've been holding this stock for years, I'm not excited to jump right into Coca-Cola by any means.
I hear you. And I liked it as a summer play. It didn't work out that great for a summer play. You were giving Ryan a hard time about taking 19 stocks, but he was being a crowd pleaser. Whatever. Well, whatever. How did we get 19? I don't remember. He wasn't being a crowd pleaser, being a pain. We still love you guys. It's just tough to do 19 stocks. Sturm Ruger, overvalued. Ooh, fundamentally not sound. Negative earnings growth. I ain't liking that. It's got an RT above 1. I'm not feeling that stock in any way, shape, form, or fashion. What is that in? That is in leisure products. It's up 1% today. Fundamentally not sound. All right, next one.
Here we got Symbiotic. I don't like this at all. I've never heard of the company. But look at it. It's trading at $42. We value it at $4. So I have a feeling it's already probably in the tech space. Let's just scroll over.
Oh, this was supposed to be hot or not. Oh, why didn't you remind me about?
Machinery
That's why
automation.
we had it last week with 19 because we did the hot or not.
Hot or not. That's right.
Thank you, Nat. Thank you, Nat.
But look at all the RV, RS, RT, not favorable at all. Hold rating. The only good thing about this, look, its growth rate is positive, 31.
Marvel, overvalued. It makes money. It's been around. It makes money in a downtrend, though. Negative earnings. I'm not feeling that. Last one, and then we're going to do hot or not. That's why we didn't, and we just looked at the graphs last week. We got to remember to do that.
That's right.
That was your idea, actually. The hot or not was your idea.
Do you guys like the hot or not style better on the graph, or do you like it when we go through the actual viewers and go over the indicators?
Type 1 for hot or not, type 2 for graphs. Type 1 for hot or not, type 2 for graphs. And if we do hot or not, we can do more graph. We can do more stocks. All right? 1 for hot or not,
AI,
2 for graphs.
Yeah. 3, both. John says both.
Wow. More people are liking the graphs. I should have Joey put a thing. It's after 3 o'clock.
So next, what we could do is we could just go to the graphs and we can do hot or not on the graph
instead of going to
break down the
instead
stocks.
of looking at the analysis here. People like the graphs. I mean, people like what we're doing here more so than. All right. C3 AI, way overvalued. AI is a hot commodity, though. Just tough. Just a tough play. When it moves just like that. And then, you put your hands upon my hips. When you dip, I dip, we dip. So I still like the AI space, just not the right time to be in it. I still like the AI space, not the right time to be in it.
Yeah, I think the interest rates are just killing this space right now.
All right. Now we'll do hot or not. Now we're freaking doing both. All right. But you got to type fast. Hot or not?
Hot.
I'm saying hot. I like the earnings and earnings growth as well. I like the earnings and earnings growth. And by way of the MPI, it looks good. Hot. You see, when we try to do hot or not, you take forever to put in hot or not. Sigh. All right.
I like
Let's
it.
go to the next one. Hot or not?
Look at growth rate's good. EPS is good. This one, I'm going to go hot.
I'm going to say that the stock is in overbought territory. Earnings growth is falling, but earnings is rising. I don't like the wicks at the top. I think it's ready for a pullback. But the trend is still there. I still think the trend is still there. I'm thinking that it's going to have a pullback. I think not. I'm going to call not only because of that. I do like the rising earnings, but I don't like the falling earnings growth, and the stock is in overbought territory. All right, Let's go to the next one. Hot. Just wouldn't buy it today.
Hot.
Hot, but wouldn't buy it today on a down day. Love the move. Love the trend. Quick getting out from the NPR. RT did cross, but if I own it, I take half off the table on this signal. But I like it. I do like this. I like CLS is hot. CLS is hot. Next one. Hot or not? All right. I'm going to start off by saying I like that it found a level of support. I'm looking at the interest rates, the mortgage rates. Could we be getting in on a good oversold spot? Stochastic says yes. It's a ETF, so I'm not going to have earnings growth and earnings per share. I like the signal getting ready to turn back up day. I'm going to call this a hot. I'm going to call this a hot. What do you think?
I think it's hot. I mean, the chart looks good. We did do a little breakout of the consolidation from the 5 candlesticks prior. We found a nice level of support. Stochastics and oversold. Looks like
it's close. That's close.
Yeah.
To getting a signal on
the
RT.
crossover is almost there. If I was more conservative, wait for a little bit more confirmation. But right now, I kind of like jumping in and just put a tight stop on there.
I got you. I'm with you on that. Hot or not?
I think it's hot.
I think it's hot too. It is at a level
I know
of being
the RT,
overbought.
the 5 is below the 40, but look at that price action. Nice lower left to upper right. The growth rate, the EPS, it looks good.
I don't like the overbought, but I do like that you just said with the earnings and the earnings growth. It could have some more room. At New says not. Drive is a day trader short. I got you, Lou. A couple of people saying not. I'm thinking it might be at overbought territory. But I like the trend. The trend is there. The signal, though, is saying for me to wait. I don't know. I might be on the not side. I like price action, but I might be on the not side because of those two things. Next one, hot or not? A little bit more volatile in the move, but definitely bottom left to upper right. Also looking like oversold. Trending a little bit from the high.
I don't like those wicks between today and
yesterday. I agree. It shows me a little bit of selling pressure. Drop it like it's hot, really, Roger?
Drop it like it's hot.
I am number one. I'm never gonna and Ryan.
My dance.
Number one.
Hey, just remember, 2 is not a winner, Glenn.
When the stocks try to get at you, drop it like it's hot. Drop it like it's hot. Drop it like it's hot. And the earnings don't come through. Drop it like it's hot. Drop it like it's hot. All right, let's go to the next stock. All right, real quick. Oof. Hot or not? Not. But you know something? I do like the earnings and the earnings growth. I just don't think it's hot. I don't think it's hot. I think it's still a good, fundamentally sound stock, just not hot. Just not hot. All right, next one. RGR, hot or not? I don't like this stock.
No.
Earnings
overbought. Today's wick kind of a little iffy.
And it's volatile.
Yeah.
I don't call this hot. I don't call this hot. And you know what else?
Now, if I can get some confirmation from that last swing high.
Yeah, that's what I was getting ready to draw.
Back in July. Is that what we're about to do? Do a freehand line or horizontal?
There we go. That would give me more of a hot feeling. We got trend, we got signal. It is overbought. Earnings growth is rising, but earnings per share is falling. It'd have to break through that this, like you said, that 3 month in order for me to be hot.
Because I don't want to buy something when it's at resistance.
I agree with that. Hot or not?
I'm gonna go. Not after today's candlestick. I'd hold off this one.
I would too. I do like signal. I do like trend. I do like that it broke through downtrend. You know what stops me? The market. The market stops me on this. Relative safety at 0.95. I don't have relative value on here. RT is at 0. You know, I think that the major indicators, our major indicators are saying no as well. All right. And next stock, not. I do like the rise in
Nothing
earnings.
good about this. Whoever put this stock in the list, if you own this company, just remember to not get emotional.
Yeah.
And try not to dollar cost average on the way down.
You know, and if you go to look, let me move this over for a second. Oh, that does do that. Okay. I wasn't sure if that did that. What is that? Marvel? It's got safety. It's not in an uptrend. It doesn't have a VST above 1. Negative earnings growth. Yeah, that's not. I call that as not.
And it's in the semiconductor space.
Yeah,
I mean, semiconductor's got a lot of, headwinds
right
now, geopolitically.
There's other semiconductors that I would be more interested in. At the right time. And last but not least, AI. Hot space, I'm not feeling the right time. I'm saying not.
No.
I'm saying not. Earnings growth is falling.
I'm going to go with not.
Long term, though, earnings is rising. That's the engine that drives the stock's price higher. I think long term it might. I still think that the space is still a good space. All right, can you put us on our last screen, Joey?
Yes.
Oh, whatever. Stop being such a hater.
Who's hating?
You are. You're like, I guess.
Who's hating what? What hating on?
You hate because we go as long as we do. Yeah, I can see it in your face.
They hate us because they ain't.
Yes, I need to tell. Do you hear that, Joey? They hate us because they ain't us. All right.
What movie is that from?
All right. We're done. Make sure, John says at VectorVest, forget dinner too with Glenn going live at, yeah. I'm going to be here for a minute tonight. Joey's going to have to be here with me too. All right, so.
The Interview is the movie. Thanks, Cameron.
Okay. I got you.
That was a good movie.
So don't forget, we will be live tonight starting at 5 o'clock in preparation for the Tesla live earnings call. And depending on how that goes, we might, and I say that sparingly, we might be able to get into the Netflix earnings call at 6. Y'all just making it a long day for me. That's what it looks like. You're just freaking making it a long day for me. But it's a good thing I love you guys. Don't forget to check out our channel and all of the videos that we've got out there. I think you guys, a lot of you tune into our live stream, but don't look at all of the other.
If you see the potential, or if you want to learn about gold as far as hedging or just how it's doing in this, current market condition, definitely take a, check that video out.
What's your video on tonight?
Uranium.
All right.
Quick thing. So since the confirmed down call, the uranium stocks that I put on the last video, they're up 20% collectively. And since I did the video, they're up 8%.
Wow.
So uranium is a hot spot. So if you're trying to, find winners, like I said, it's a dangerous market to be buying stocks, but there are a few places in the market that seem to be working, and that's the direction I want to put you in.
There you go. And I tell you, if you guys don't look at our other content that's out there, you're doing yourself a disservice. How about if you did watch Ryan's video back then, you'd be up. All right. All right. With that, folks, see you tonight at 5 p.m. as we go over the Tesla call. Don't forget Ryan's video tonight and Ryan's video tomorrow. With that, adios, arrivederci, ciao, au revoir, sayonara, aloha to all my peeps in Hawaii, especially where? Especially in Maui. Actually, before I do that, I am sending my prayers out to the Israeli people as well as they go through all of this tumultuous time. Okay? Bom dia. Salam, shalom, both together. All right? Because I think that that's important, that I always put those two together, even though they don't always like each other, but I think that it's important that I put that way. Where am I at? Yes, no. Shalom, salam, shalom, namaste. Yasu train. All right, we out of here, folks. See ya.